Welcome to the crypto simulation, where we navigate the crypto markets using data analysis and market psychology. Be sure to follow me on Telegram at the Snake Pit, and to also like and subscribe to this video if you enjoy the content. Tonight I'm going to talk about how we will know when Bitcoin has topped out for this cycle. Just a reminder, nothing that I tell you is to be taken as financial advice. Always do your own research. This is Bitcoin on the 5-day, and something I think that we need to be mindful of when we are pursuing theories about what could possibly happen to Bitcoin is to hedge against our own views. Now, in my video that I did last night, I talked about how one scenario that could play out is that Bitcoin experiences a substantial correction just before the halving, and then starts to crab around in a bullish kind of way, maybe for a few months into the summer, and altcoins fly and all that stuff. Now, that was based on my analysis of different factors, including dominance, some of the indicators that it topped out. But there was one oversight that I feel like I made in the video, which, you're welcome to disagree with this, but I think it's important to look at topping indicators. Most major drops by Bitcoin during a bull market have happened, not without a lot of, there's been exceptions, but have happened after several topping indicators have triggered. So I'd like to go through and explore those with you. Okay, the indicator that we're looking at here is the market value to realized value, or MVRV z-score, which is a topping metric. It's also used for identifying bottoms as well. And it can be a little difficult to understand, so let me explain how it works. So on my graph, this blue curve that you see right here, this is the market value to realized value ratio. So the market value is the current price of Bitcoin multiplied by the number of coins that are in circulation. And the realized value is basically the price of Bitcoin when it was last moved from one wallet to another. And all those individual prices are added up, and then an average is taken of those. So what this does is it takes out the short-term market sentiment, and it's more of like a long-term measure of overvaluation or undervaluation of Bitcoin. And the yellow graph here is the z-score, a statistical z-score, which is a standard deviation that basically pulls out the extremes in data from market value and realized value. And generally speaking, you see market cycle tops when the distance from the MVRV z-score and the MVRV ratio is as large as possible. That's when you're going to see extremes one way or the other. So I'm illustrating this with the April 2021 top, and you can see that, in February, the MVRV z-score was maxed out compared to April, but still, you kind of anticipate that you're going to have some kind of topping process generally once you get above. You can see that we first got above the MVRV line, or MVRV curve. The z-score got above it in late 2020, November of 2020. It actually looks like the top was in February of 2021, just 2 months before a significant peak in April of 2021. Now, in October and November, we also went above the MVRV ratio. It's just a hard one to say, guys. So if we scroll back maybe a little bit to, let's go back to 2017, you can see we got really overextended. So, the MVRV z-score is not something that you would want to use in isolation from other indicators, but look at that, we printed red. Let's go back to 2013. You can see this thing's a really good bottom indicator. Here is our first peak in April, which is down here. We got pretty overextended. We actually had to come down and have a small bear market for a little while before, hopping back up again and breaching the red region. And if we go back even further, I guess there just wasn't a lot of data to work with, right? Initial capitalization. So where are we at now with the MVRV z-score? So if we bring Bitcoin down, let's bring it down and zoom to today. we're not really that overextended. We've just gotten above the blue. So this is an indication that we are finally, getting somewhat near probably a market cycle top of some kind, but we're not quite there yet. I mean, if you look back to 2021, look how, and we never got above the red line. So perhaps we don't get above the red line again this time. Maybe we don't even get as overextended. That makes sense when you consider the amount of money we're moving around, but I think this is not much of an overextension. So this is something that to me points to us not being super close to a top. And if we are, it sure seems disappointing. The MVRV Z-score is just barely got above in March. That's kind of insane when you think about how quickly Bitcoin's moved up. This may point to Bitcoin not being as overvalued as people think it is, including myself, which is why it's always a good idea to think of what could I be missing when I'm doing my analysis. So this is the point for the bulls for Bitcoin, in my opinion. Now, this is not to say that we stay above here. We could come back down. We can't look at MVRV in isolation. So this is the NUPL, or the net unrealized profit and loss indicator. So this is actually very similar to MVRV and follows similar principles. So again, the market value of a coin is the current price of Bitcoin multiplied by the number of coins in circulation. And the realized value is just basically all the individual prices that have been added up of Bitcoins the last time they were moved, and then multiply that by the total number of the circulating supply. And now where this is different is we're not going to take a Z-score. We're going to actually subtract the realized value from the market value. So we take the market value minus the realized value. And what we're going to do then is that's going to give us an unrealized profit and loss, right? Just depending on what the ratio looks like. And we're going to take that unrealized profit or loss and divide it by the total market cap. And that's called the net unrealized profit and loss, or NUPL. And this is really a good way to sort of look at the sentiment of the market over a given period of time and see where things are heating up and when they're slowing down. So anyways, that's how the indicator works. Let's talk about it. So you can see whenever we've tapped this top line, that's an indicator that we are probably at or very near a market cycle peak. We had one in April of 2013, cooled off a little bit, and had a second one in November of 2013 that was more significant in terms of NUPL. In the bear markets, you print this green for likely bottoming regions when you go below this line. So another useful indicator. MV and RV are useful tools for identifying cycle tops and bottoms. In 2017, we only struck once. That's it, just here in November and December, and that marked the peak. Slid into a nasty bear market, crept out of it, and notice in our 2019 bounce we didn't get up this high only until when? Here it is again, February, March, and April. And this was a distribution phase of profits. So, whether you sold here in February or March, or you sold in going into April, I feel like, you were probably doing about as well as you could in terms of, ROI from cycle bottom. And, here we are in October and November, and we are not hitting this. Okay. So where are we at today? Well, so remember when I showed you the MVRV Z-score? We got kind of bullish. This is not as bullish to me. This is definitely a bull trend, but it doesn't seem like it would take that much to trigger the NUPL. If we got a really bullish move in April, that could trigger it right there, and that could be either a very significant intermediate cycle peak, which would be my base case, or it could be the cycle ending peak, which I don't think it is. I don't think the market's been running long enough for that to happen, nor do I feel like a recession is here. So I have no reason to believe that that would be it, but that would, to me, mark a very significant peak and probably lead to a nice cool down period. So, seeing something like that, it's kind of hard. If you look at how these things move, they tend to move up until they don't, right? It doesn't always work that way as it did, out of a bear market, but in a bull market, these just tend to kind of trend up. I mean, there are dips along the way, and it certainly could happen. We could get a little dip, but the trend is generally up until it reverses. And in 2017, it was a really, really long ride up, compared to something like 2021, where we had this like nasty COVID dip. But if COVID hadn't happened, we probably would have just chopped along. And, we barely touched this, but we did touch it. But the cycle wasn't over. We had like a dead cat bounce. Now in 2013, like I said, we actually touched it twice. So what are we going to do? I have no clue. I don't know. But it doesn't seem like we've been running long enough in a bull market, in terms of the new bull to really justify ending the cycle right here. So I'm kind of thinking intermediate top. I've been, calling for one for this entire month to come. And in last night's video, I thought maybe it would come before the halving, but these topping indicators are getting me to kind of like want to hedge against that, because as you'll see, the topping indicators, while this one is just kind of going flat, it seems like it could run up a little bit higher. Let me show you some more convincing stuff though besides this. This is the spent output profit ratio, or SOPR. So the SOPR is the relationship between the purchase and sale price of Bitcoins that have moved for sale or purchase within the last day. If the ratio is greater than 1, which on here would be up in this region, that means that the coins are being spent at a price that's higher than what they were bought at, meaning that people are mostly in profit. However, if the ratio is less than 1, like down here, that means that people are basically going to be mostly at a loss. They're spending coins at a lower price than what they bought it at. You can see that during bull markets, like we get this like buildup in SOPR. This happened in leading into April 2013 top, and this is again on the 5-day. So, and then we had a little bit of sales into that first peak, and then we could see that the SOPR dropped off, got a little bit bearish for a while, and then started to build up again until a real crescendo at the end of 2013. So right around that top. And you can kind of see the green is shaded in here. This is just another version of looking at the SOPR, telling you this is bullish this entire time. Minus that cool down. And then here's your bear market. During bear markets, not fun, right? Everybody's at a loss. Okay, then we head into our next bull market. This was 2017, and you can see we had several of these crescendos that would just fall off. We didn't have very much red here though. There's a little dot here in July of 2017, and then we just kind of kept on going until December of 2017, which actually was at a slightly lower level than July, and then things just dropped off really fast from there. And you can kind of see though that this graph made it a little bit more clear. We did have peak strength in August of 2017, a few months before the bull market ended. So you can, you've seen this with a lot of indicators where their strength really picks up before the bull market's over, sometimes several months before. But notice all these like moments of bullishness, and of course these are neutral moments in here, and then we just went straight into a bear market and just the opposite happened. And we had a little bit of relief, but it wasn't a short-lived accumulation phase inside of here. And then we started our next bull market, which again we had the net the SOPR ratio got up to about 4.5, and then kind of faded in the summer lull, only to peak again in July, ironically, and just kind of trailed off here. And the November top is just barely a blip on here. You can see it's very clear that January of 2021, no, December of 2020 was an important time as far as the SOPR goes. And yeah, I mean, look at how November we're just on our way into bearishness already. So that 69K top was not as mathematically significant as a 64K top, because a lot of the relative strength of Bitcoin had already faded by then, and logarithmic regression makes a 69K top not as impressive as a 64K top many months earlier. And now here's where we're at now. So you can see that we are in bullish territory. We did have a neutral print in January, and we are getting pretty low again. So it's kind of hard to, I mean, we got pretty high in March of 2024. This month we got all the way up to 6.8, but we were really trailing down. So, it's anybody's guess after, when the halving comes, if this is going to jump back up again, or if indeed a situation from my last video that I made, again, which I'll link at the end of this one, is the correct outcome where a more sustained correction is likely. Very hard to tell, but what I can say is that we are, in a bull market, right? This is definitely a bull market, and the accumulation phase, I would say, was right here, stage 1, and I think this October to 2023 to now, these past 6 months have been, for sure, bull market territory. And these tend to last for a while. I mean, if you go back in history, look at how long these last. We've never had one that was like super short. So, I really don't think, even if we have put in a top already at 73K, or if we're about to put in one that's slightly higher, I don't think this is it. I think the bull market will go on for longer. Miner transaction fees are a little less reliable as a topping signal nowadays compared to probably back in 2013 or even in the last cycle, and I'll explain why. But you can see that, and unsurprisingly, during bull markets, that's the time that is most profitable for miners, and Bitcoin transaction fees tend to be at their highest around market cycle tops. April was clearly not a market cycle top, although you may have not known it at the time, because, although we didn't get all the way up here, things were starting to go up. But come September of 2013, we got a really huge spike. But if all you were going by was this indicator, you would have thought we topped. Clearly, that was not the case. We had another spike in November, and the highest spike came later on in November, right at the market cycle peak before we got a lower high. So this is a tricky one for sure. But you can see you do get these like very high spikes during bull tops. And so if we scroll over to 2017, that one is a much more clear top compared to previous times, because we just literally blew off. It was a blow off top on transaction fees in December, with a dead cat bounce in transaction fees in January, which corresponded to the dead cat bounce that happened right after that top. And we just kind of like move along here. You can see in 2019, transaction fees heated up, but not that significantly. Again, they heated up in May of 2020, November of 2020, January 2021, and then April we got that huge spike, and that marked the end of the cycle, which was a rounded top. And look at November 2021, barely even registers on here. Going to our current cycle, we had a nice spike in May of 2023, a spike in November, December, and then a really high one in December again, and then a dead cat, and we're actually underneath here, this is strange, right? So it's clear the market did not top in December. It's hard to call this a local top. I mean, I guess with diminishing volatility, maybe, right? Maybe the drops just aren't what they used to be. And that's something we have to adjust to. Or there could be another explanation, Bitcoin ordinals. And that could also explain this spike potentially as well, although this was a pretty sharp spike in price, even though this was during an accumulation period. So, yeah, ordinal inscriptions have been sort of a boon for Bitcoin miners. And it's really interesting to see how this is kind of flatlined at a higher level now, kind of wondering what's going to happen next. Next, I want to look at the Bitcoin hash rate, which is basically a risk metric that is connected to the process of mining Bitcoin, which involves solving a complex mathematical puzzle. And if you solve it first, you get rewarded with that block of transactions or a Bitcoin. This helps secure the network, and it also validates the transactions. So it's a security metric. So the greater levels of hash power or computing power that are on the network, the harder it would be for somebody to overpower and attack it. So we tend to see hash rate really pick up during bull markets because there's more activity on the network. This is unsurprising. And you can see what happened in 2011, right before the first major Bitcoin top. We got a nice rounded top of hash rate, came down below this line right here, which is the signal line for hash rate. and then it just kind of hugged things in 2012 during that accumulation period. And yeah, this thing, it's not on a log scale, and I don't really want to put it on a log scale, although I might if this persists. But you can see that hash rate started to come up very significantly heading into 2013. Okay, and it just kept going up and up and up, right? Even after our top, apparently. You know what? Let me put this on a log scale. Oops, my bad. Okay, I've got hash rate on a logarithmic scale now to make more sense out of it. So what you can see happen in 2013 is we had a concave up movement right until November, and then what happened? We started going concave down, but still increasing. But we were going concave down instead of concave up, right into accumulation, and then the start of our next bull market. You can see that we inflected from concave down to more or less concave up as we headed into our next peak. And then we started to trend after, December of 2017, we started to go concave down again. It's kind of hard to spot these inflections, but you can kind of see what the hash rate does over time. And then we, had our cool off period heading into 2020, kind of flat for a while, had a big drop after, again, we hit our April top. So you can see here's the bull run, April top, maximum hash rate, and then we had quite a dip in June of 2021. We recovered and went to hash some more, hash it out. And you can see that we started to, we started to lose our concave upness and really start to roll over after November. And then hash rate just kind of, it was still trending up, believe it or not, even throughout the bear market. And so it's kind of hard to really glean a whole lot from this, except to note that we did have a peak hash rate in December of 2023, and we've kind of flatlined since then. So again, not exactly sure what the reasons for this are, but you can let me know in the comments what you think. So I'm not sure how useful the hash rate is at being a top signal. Although it has called tops in the past, it would have said that December 2023 was a top, and it also can go up during bear markets. So just depending on activity on the Bitcoin network, that activity could be selling, So, it's kind of a measure of kind of market activity on the Bitcoin network. I moved over to the 2-week for this next indicator. This is known as the Arun indicator, and the Arun indicator originally consists of an upline which measures the number of periods since a price high, and a downline which measures the number of periods since a low, but this has been consolidated into a single indicator. So when the difference between the high and low, the high is the distance between the periods since a high and low is positive, you're going to be in the blue region heading up, and if it's negative, you're going to be in the orange region heading down. So basically, the closer you are to a high, the higher this is going to be. You're going to be in this region above 50, and if you're above zero, and if you're below zero, this is where you've been. This is based on 25 periods of data typically. So if it's a reading below the zero line, then that's telling you that you've seen a high or a low within like 13 periods or more, rather than 12 or less. But the indicator is basically bullish, as you can tell, when it's heading up, and bearish on the way down. So we can't really glean a whole lot from this one right now. We can see that we're kind of flat, and when that's happened before, we have come back up sometimes. So we should anticipate that that's a possibility. In fact, that's exactly what we did here in April of 2023, May of 2023. We came back up and then went down. If we go back to previous bull markets, I guess we can just work our way backwards. So if we look here at the 2020-2021 bull market, we can see that in June through, starting about May of 2020 all the way to April of 2021, we stayed above this top line and only went down during the summer lull. We got absolutely down to the bottom and then climbed back up for one final, push. And then we came down, came back up into our dead cat bounce, and then really just spent a lot of time down, got very overextended. So the odds are that we stay up above this line, and that this is kind of giving, I mean, it's not necessarily perfect, but you can see, like, even here in 2016, 2017, once we get up top here, we're typically in the middle of our bull market heading towards the end. And if you go back to 2013, you can see that in November 2012 we bottomed, and then we pretty much rode the top line more or less straight into April 2013, came down. This looks a little bit like 2021, and then came right up into our November 13 peak. So this is on a 2-week time frame. It doesn't mean that we're immune to drops. I mean, you can see we had our January drop, but the probability is actually up rather than down, assuming we haven't put in a top. And there's one indicator that makes me think that we have definitely not put in a top yet, and that is the next indicator I'm going to show you. Okay, now this is called the Pi Cycle Top Indicator, which has been historically quite reliable for timing tops, and it looks at the at 2 different moving averages. The orange moving average is the 111-day moving average. The green one is a 350-day moving average multiplied by 2. So it's not a 700-day moving average, it's the 350, whatever that average is, and then times that by 2. And this indicator has triggered every single major top except, a few I'll show you. So we triggered the April 2013, we triggered the November 2013, and you can see when these cross, this is more visible here, is crossed in August. You're getting near a top. Of course, this is on a 5-day time frame, but that generally means a top is nearby, right? And so we did hit our top in December of 2017, and that was the top. Now, however, this 2019 top did not trigger the Pi Cycle Top Indicator, as it shouldn't. And then we came up into April of 2021, and we triggered the Pi Cycle Top, but we did not trigger it in November of 2021. And this is because this was really kind of like a dead cat bounce. A dead cat bounce into a new price high, but not a new ROI high. The return on investment is what matters. So where are we now? Well, these lines have not crossed yet. And then if we were to try to extend this and imagine where they would cross, the earliest we could see them crossing would be maybe June of 2024. And so, I have projected that we could have a cycle ending top in the summer. Now, that could also correspond to an intermediate top for all we know. It's happened before, but it could be a cycle ending top as well. So if we are to go up a little bit higher here, it certainly seems like there's room to run based on the Pi Cycle Top Indicator. Okay. Now this does, of course, not take into account everything I talked about in my video last night, but it's just another way of looking at things. It's like, okay, maybe we get a little bit of a cool down. Maybe this is the cool down. Maybe we cool just a little bit more and then we take off again, and go a little bit higher after the halving. And we just have to keep an eye on these things to see when they're triggering. Even if that happened, this still would not trigger. So should we rely on the Pi Cycle Top? I mean, it's proven to be accurate in every single market cycle, at least timing the first top, which is still significant. I think it's good to use it, but I think we have to use it with caution. Just like any indicator is subject to failure, okay? So we shouldn't rely exclusively on it, but it should be in our toolkit of indicators to use. This is another visualization of the Pi Cycle Top using a different indicator, and you can see that whenever the short crosses above the long moving average, that's when the Pi Cycle Top triggers. And then you can see when the short crosses, the long crosses the short, that is generally, from some bearish action. Long crosses, the short crosses the long, Pi Cycle Top. And then look at it as we go into a bear market. This is lagging data, keep that in mind. It is lagging, but then as it starts to squeeze back together, you can see that we are getting closer and closer to a top. Finally, when the short crosses the long, boom, Pi Cycle Top. And then over here, long crosses short, back into a bear market. And we can now, just track the entire history. I like this indicator is actually a better indicator than the one I was using, but maybe not, I don't know, not accessible to everyone, but this is the pi cycle top triggering right at April of 2021. Look at that. So this is using a slightly different approach in terms of the averages. You can see that these are hitting like right on the nail, and looks like we're getting close, but again, looking more like that summer time frame. Interesting, right? So let's go back in history. Just because we crossed does not mean that's it, right? We crossed here in April. Cycle wasn't over, but it was mostly over, right? This is a dead cat bounce by all means. We are close to a significant top. According to the indicators, though, it seems like that top would probably hit in the summer. You can see here, yeah, this just nailed it. If you go back to 2013 again, you can see something like this could happen, right? Where we could hit a top, roll over, and then hit another top. We have to, be mindful that it's happened before, so it could happen again. It hasn't happened since, and that might have to do with how much money we're moving around. So, based on the fact that it's only happened once, I wouldn't count on it happening again. But we could kind of, like I said, we could imagine this kind of hitting sometime in the summer. So does that mean Bitcoin gets a major cycle top in the summer? And maybe me calling for Ethereum to run in, May to June might be a little premature. It's possible. It's possible. It's entirely possible that Ethereum doesn't run until like July or August if this were to play out the way that the pi cycle top looks to be going. But again, folks, like this could come down and bounce around. We don't know exactly what Bitcoin's going to do. Bitcoin has hit resistance right up here at the 350 day moving average times 2. Let's see what's happened in the past when it's hit resistance like this. It hit resistance in November of 2020 and then just blasted right through. You're going to need that kind of action to happen for the short-term moving average to start to creep up like in a more fast way. It hit resistance on this line in July of 2019 and it didn't mean a thing. We just went straight back down. It hit resistance in January of 2017 and we had to cool off a little bit. Hit resistance again in March of 2017, had to cool off some more, and then we really started to take off. Hit resistance in June of 2016, didn't mean much. Hit resistance in November 2015, didn't mean much. We can just keep scrolling back. It seems like the first time you hit this, you do encounter a little resistance. We encountered some resistance in August of 2013. A little bit of resistance here in 2012, heading into late 2012, and then it was just off to the races from there. Perhaps one of the best topping indicators out there is the Chande reverse momentum indicator. It has been very accurate. And you can see right here in May 2011, it nailed the top. In April 2013, look at that. It tapped this top line, nailed the top. Nailed the November 13 top, which actually was, you see what happens with momentum? It like heats up and then starts to cool off and it gets these little bounces. So you can see how November 2013, just like November of 2021, was really a dead cat bounce. Look at how it just nails these bottoms so beautifully. And then you can see that in 2016, we moved up all the way to December 17, and that was all she wrote. Straight down, red the whole way. Nothing beautiful to see. And the dead cat bounce happened way later. Still just a bounce, but you see how we hit that peak level? Again and I'm sorry that I need to move this. 2020, heading into 2021, we actually were losing momentum, but the significant top was December of 2020, believe it or not, and it just started to creep down from there. Got our dead cat bounce. Always seem to get one of these dead cat bounces. In 2017, it happened way late. 2013, it happened a few months later. In 2021, it was very similar to 2013. So here's another dead cat bounce on the way down to the bottom. And then we can see that the entirety of early 2023, we tried to get up and got rejected by this line right here. Look at where we just hit. So You know, my theory from my last video may be true. For all we know, it could be true that we're not going much higher than where we've already gone. 73,000 might be a significant point. Now, I'm not saying 73K is the top, but this indicator, which has been very reliable, would suggest that we probably can't go much higher than, like, you know, 80K or 85K this cycle. Now, is this going to kink back up again? It certainly could. Or are we going to start trending down and kinking? We don't know. But this indicator, which I'm sharing with you now, is probably one of the most reliable indicators I've ever seen in terms of trying to time a top. And it would suggest to us that we are very close to one. So, and that doesn't mean we won't see a higher price target, but it means that probably the bullish momentum, like the majority of it for this cycle, is gone. And we're going to start crabbing and then probably come down and have some bounces along the way. And those bounces will potentially result in higher prices because of log regression. So my projection for the end of cycle top of 75 to 85K sure seems sensible and rational when I look at this chart. My projection that we may correct, however, have a major correction before the halving is a little dubious, okay? We are flat right now. We're seeing this flatness on a lot of indicators. So, you know, and congratulations, by the way, if you stayed with me this long in the video. You're getting the rich content here, you know, near the end. Sort of like a video bull market, right? But yeah, I think like this is fairly fascinating that we could see bullish momentum really start topping out right around now. And then maybe in the summer, we get that dead cat bounce out of Bitcoin that actually gives us a lower high on this indicator. And, you know, we can start to kind of know when to get out of the market based on this indicator. This indicator to me, along with that other pi cycle top indicator, the reverse pi cycle top indicator that I just showed you, sure seem a lot more robust than the ones that the older ones, but I want to show you those too. I want you to be exposed to all these indicators so you can make up your own mind like what you want to use. Okay, so this is a visualization of MACD that I've never before shown you. But this basically gives you a way to visualize MACD directly on a chart. And I love this indicator because it allows you to see the periods where you are rising in price and when you're falling in price, and how that corresponds to this indicator, which has a difference of the of two moving averages. I can't remember the numbers. I think it's 21 and 12 or something like that. What is it again? 26 and 12. And you have the signal line. So this gray bar here represents the 0 line on the MACD histogram moving average, and you can see the distance between these. The gap is starting to close, and that's why the signal line is rising. You can see that it rose over here, indicating that a period of red is likely approaching. And this is measuring that strength of that happening before that crossover with the green up here. So this is like this is basically saying this trend is strong. So what this is telling me is that downward price action is more likely than upward price action. So, you know, my thesis from yesterday's video seems to be mostly intact. That downward price action into the halving is the most likely outcome. Despite what you're seeing, that is the most likely outcome unless this rolls over, which could happen. But look at this MACD starting to roll over the wrong way, right? So, and if that should happen, we could see a period of red entering under the charts. Perhaps before we resume the uptrend later, if we resume the uptrend, assuming we don't go down and correct the way that I predicted in yesterday's video. So this is also a little bit of cause for concern. And my apologies, this is a very, very hard indicator to read, but I would just messed up this line. This is, again, the distance between the moving average difference line and the signal line. Okay, and this indicator is a true strength indicator, which is going to give you some buy and sell signals based on RSI. Unfortunately, this only works on a regular scale. Some of these indicators don't work on a logarithmic scale, and this is one of them. So it'll be kind of hard to show you the price data, but you can actually overlay this on the chart as well. You can see that we had a buy signal in July of 2012. This is where the yellow line is below the blue line. A sell signal in June of 13. So that would be 2 months after April 2013. So you have a 2 month where it's telling you sell, but you probably are going to want to sell as soon as it starts heading towards the yellow line. And then you can see under here was a time to buy. This is a buy signal in October of 2013. And then you had your peak just a month later. Sell signal January 2014. And then we had a buy signal in October 15. We had some close calls. Probably not a great idea to be selling in here. You know, time matters too. We hit a peak. You know, this is RSI base, so you're not getting all the way up here. And then we came down January 18. We had our sell signal. We had a buy signal in May of 2019, a sell signal in November of 2019. Choppiness. A buy signal sometime here in 2020, a sell signal in May of 2021. Another buy signal did not materialize, unfortunately. So I don't know how reliable this indicator really is, but we had a buy signal in February of 2023. We did almost have one, but it didn't quite materialize. This is like what I call it, a dead cat bounce. February 2023, and now we are getting back into this upper region. And when we're in the upper region, which is above this 50 value, how long do we tend to stay there? Not very long. December 2020 to April 2021, we stayed there for 5 months. We entered in May of 2017, and we stayed there till January of 2018, so about half a year. Back in this cycle, October 13 to about January 14, so 3 months. February 13 to June of 13, 4 months. Even in 2012, March 11 to August 11. Now that was actually a much longer period, but you don't want to, count the initial capitalization. So the point is, we have entered, just barely entered into this region, and this is another thing that's kind of making me think that we're entering into that final bullish push where we're getting into definitely seeing some kind of major top very soon, and I'm projecting it around 75 to 85K. I'm just sticking with that until I see something that would make me think otherwise. So after seeing all of these indicators, all these classical topping indicators and some ones that I'm sure you've never seen before, what is my conclusion? I still stick to what I said yesterday. I'm only going to change one thing about it. There's a possibility we push a little bit higher into the halving, but that's it. I don't think we go any higher than that for a while. And that will be the transition to more bearish momentum, really entering the market for Bitcoin. I can't predict if we're going to dump into the halving or if we're going to dump after the halving, but I am eyeing the halving as a very significant turning point either way. I think it's super hard to tell. Like I look at the indicators, everything's neutral right now, so it's a coin flip. But I'm going to stick to my guns here and say that most of the indicators that I looked at today and yesterday, which is like dozens, are telling me that we are not far off from a very major peak. We're not that far off from it. There's no guarantee that it happens around the halving, but odds are it does. And that will throw us into altcoin season shortly thereafter, which was my May-June timeframe for a nice altcoins, late spring, early summer. And then we always get a dead cat bounce from the bullish momentum fading away. It always comes back. 2017, it didn't come back for a really long time, but we also took forever to grind to a top there. So I think we'll get another dead cat bounce that will probably result in, at the very least, a double top, maybe a higher high, I don't know, but something down the line in the late summer, early fall. And I can't imagine our cycle going on too much longer than that. The end of the year to December seems like quite a stretch when I look at the data. So I'm just going to have to stick with my original predictions of major top is coming around the halving, if it's not already here. Altcoin season coming in May to June timeframe. Another cycle top coming towards the end of the summer, early fall, or sometime, fall. Fall is probably more likely, but August, September timeframe is kind of what I've said. and I'll stick to that. And I'm going to stick to a $75,000 to $85,000 market cycle top. Now we may go higher than that, slightly higher, whatever. I'm just trying to temper people's expectations. I think it's very unlikely that this cycle goes into next year. I think it's extremely unlikely that we go over 200K. I even think it's unlikely we go over 100K. And I know that sounds crazy, but I'm just looking at the data and trying to interpret it the best way I can. So if you disagree with me, feel free to leave me comments. Join me in my Telegram at the Snake Pit, and you can disagree with me. It's not an echo chamber. But more or less, I'm sticking to what I said in the video last night. I'm changing one thing around, which is just that I believe we could see another push higher into the halving and break the 73K top. Maybe we hit 75K or 76K or something like that. I'm not thinking it will be dramatically higher, but it's possible it's a slightly higher high. We get everybody thinking that we're going off to 100K and then we don't. That's a possibility too. Or we've already hit our high and we just kind of dump into the halving. Now, the reason why I don't think that yesterday's theory is really the most likely one is because we need something. Well, no, I should say it's an equally likely one. We just need something to knock Bitcoin dominance off of its pedestal. So Bitcoin dominance has been very sticky at the 53 to 54% level. We need Bitcoin dominance to kind of max out already if it hasn't done so. And if Bitcoin pushes higher to 75 or 76K, it's not going to raise dominance that much. But then if it dumps after that, it's going to raise dominance, and that should knock ETH Bitcoin down. If Bitcoin dumps into the halving, that should raise dominance and knock ETH Bitcoin down. So yeah, really either situation is likely. I'm just the important thing is I'm eyeing a dump sometime around the halving. Whether it comes right before or right after, that I can't tell you, but I think it's going to be significant. And it will pretty much mark the end of the uptrend of bullish momentum. And at this point, bearish momentum will start to enter in, and the bear market will creep into us. Think of it like when Bitcoin bottoms. When Bitcoin bottoms, does it just go straight up to a new all-time high? No, it doesn't. It can bottom, it can have a little relief rally, and then it can bottom again, and it can crab around. And so the same kind of behavior happens near a top. You can hit a top, and then you can test it again later. Okay, just like you hit a bottom, and you can test it again later. So I think we're seeing something like that very, very close to playing out. We've seen a lot of our indicators max out strength in December, which was now almost 5 months ago. And so intermediate cycle top most likely is what's coming or is already here. Again, I have no way of knowing that without it even happening, but 73K is super close, I think, to whatever this top is going to be. And then if we hit another top later in the year, the highest I could potentially see it going would be around 85K. So anyways, thank you for joining me for another insanely long video. I swear I keep thinking I'm going to make a short one and it ends up being really long. I appreciate your patience as I go through some of these more complicated indicators. And sometimes I don't remember exactly what I'm looking at and I have to refresh my memory and look at it a little more closely. But you've seen just a whole plethora of indicators and data analysis, and it's really helped me stay firm in my theory. And if you like, come to my Telegram group. We have 175 people there. We've only been doing this for about 2 months, so we'd love to have you. And please remember to like, comment, share, and subscribe to my channel so I can push my content out to more people, and hit that notification bell so you can be notified of future releases. Thank you so very much for joining me tonight, and I will see you again next time. Bye.